What is up, everyone? I am Charlie Shrem, and this is Untold Stories, where twice a week we dive deep with crypto's most influential leaders to find out how this movement really came to be. This show is now produced with audio and video, so check us out on YouTube. And guys, I love emails. Send me a message, feedback, and ideas. You can find my email address at untoldstories.com. This show is powered by Blockworks Group, a media production company with over 20 podcasts in their network, including mine and my friends. Check them out at blockworksgroup.io. With that, today's amazing guest is my friend Ido Sadeh Man, who is the founder, chairman, and of the board of Saga, which is this so cool hybrid central bank stablecoin, taking all the good aspects of central banking, putting it into the stablecoin that offers the ability to have credit and capital markets, all these cool aspects. You can vote on the ability to actually remove the governor of the central bank, that is Saga. And we actually talked about what is the history of central banking, and is it all bad? Because the world leads us to believe that all banks and all banking is bad, but it's not. There are good aspects of it if we could take it into central banking and understand how it all works for the past, present, and future. We can understand our own aspects of financial literacy, and we can take care of our families and friends better. I'm Charlie Shrem. I'll talk to you guys right in a minute. Ido, thank you so much for coming on the show today.
Thank you for having me, Charlie. It's
Untold
a pleasure.
Stories. This is going to be a very interesting episode because, you know, we usually talk about timeline and about the people involved in this industry, and we talk about the different projects and coins and tokens and social experiments. You don't often get an opportunity to talk to someone who launched a project a few years ago, had this social experiment, and then be able to take feedback and then change that. And simply the reason that is, and to adjust and to adapt, is simply because this industry has not been around long enough. Like Ethereum has only been around a few days, months, years. I don't even know. So, you know, we talked about the best thing in this industry is experience. Like just having experience teaches you a lot. So when someone asks you, you know, why should when someone asks you like, what made you a CEO, monetary theorist, and economist when you used to be a jazz musician, what do you say?
So I think that the first thing is humility. I'm not really a monetary theorist, and I keep surrounding myself with people that are. I came to this space early 2017 while phasing out of 15 years of managing startups and managing product for startups, and wanting to go and study political science because clearly something is wrong with our social paradigms. I think now it's as obvious as ever. The plan was to sort of write a thesis for a VC I was a part of about blockchain, and that made me realize that I'm here to stay for a few years, for a few dozens of years.
Even if you had to be doing a startup all over again, I guess that's what happened to a lot of the CEOs in the space too. It's like they had startups and they retired. You look at like Joe Lubin and Brian Armstrong and you know, they all even Tony Galippi from BitPay. It's like they all were retired. A lot of them playing golf already. And then they come back running a startup in this industry. Why do you think that is? Like, we could talk about how much it saves world peace and blah, blah, blah. But like, what is it like realistically? What is it about this industry or about blockchain or just about crypto or whatever? What is it about what we're doing that you think would make someone jump from working in, I don't know, like medical technology to jump into working in blockchain and potentially for less money? Like, why would someone do that?
I think it's a sort of a back to Renaissance. Being involved in the blockchain industry is really being involved with so many things, with the fascinating technology, but also with political science and economy, and psychology and sociology. It really allows you a sort of a bird's view on the state of the world and an ability to really partake in shaping the solutions to the problems we have.
Wait, can you repeat those four again? It was political science, sociology, it was monetary theory, and there was another one.
political science, sociology, monetary theory, but I could add a few dozens more. Philosophy as well, and anthropology as well. Understanding how human structures, social structures are working. And I think that we're in a time where they are being reshaped. And I believe that we in the industry are taking part in reshaping it. But it brings me to your first question, which is that I think that we need to be humble and consider that the startup year is not about 3 years and exiting. These are journeys for tens of years, because we're touching the fundamentals of people's lives and money, for example. How money works, who do we trust to issue money, and those fundamentals are taking a long time to change. So unless, if someone came to me and asked me whether they should run a blockchain project, I would say that if they're ready to spend the next 20 years, they should, but if they're not, they probably shouldn't.
So let's jump into some of these different metrics and ideas and thoughts, but especially when it comes to monetary theory and political science. And actually, when we're talking about Saga and your newest project in the company, which you and I have had the fortunate ability of working together on this project, and I'm really, when we first started talking and you asked me to join you as a consultant, I was really mostly excited how cool and novel this is, but why, I'll tell you now. Going through all the different things that you just mentioned, this project touches on all of them. And I'll tell you, in terms of central banking, because most people who get involved in crypto or Bitcoin early on, the messaging was always like, central banking is bad. Banking is bad. Let's have decentralized finance. Most people don't understand that that doesn't really make any sense, because what is decentralized finance? Why are people so interested in DeFi right now? The reason everyone's so interested in DeFi right now is because of the ability to earn a yield. Now, without banking and without central banking, without the ability to have lending and credit and capital markets, you can't really have a healthy financial economy and world. And so everything up until now with crypto has just been about coins, tokens, smart contracts, and DAOs. But when you approached me with this project, you said to me, no, the concept of central banking is not bad, but how it's run and the centralized factor of banking is what the bad parts are. Let's take the good parts. I know I'm speaking for you. So the question I have is, not the question, but can we go into what are the history, or what have you learned about central banking in general? Was central banking really came out of the Bretton Woods conference or the Jekyll Hyde? Is that where it kind of came from? Jekyll Island.
So I think it started earlier. It came from cheap printing. It came from newspapers. When people could start sharing ideas, they could start speaking to each other. They could start trading with each other, and they eventually needed a currency that they would be able to store value in and exchange. And when this was on a national level, came the central bank. We've had our own chip printing revolution, right? With social networks and digital communication. And I think that this is the real challenge that central banks are facing. I think that they're being run poorly now, but they're also running an inadequate scope of monetary policy. They're running national monetary policy in the global economy.
Should they not be? Should central banks be involved in foreign policy?
No, so I think that they should be, as long as we realize that we're all citizens of our states. We still have a national economy. It's a predominant economy in our life, but we have now a new complementary economy, which is a global economy. I'm exposed to the US economy and to the Asian economy, and you are as well, although we live 10,000 kilometers from each other. And we need a complement that will tend to this new global scope, and this complement cannot be run by a single nation. So I want to say that we have a lot to learn from central banking and monetary policy if we want to rectify the things that we believe are problematic there. I don't believe we should throw the baby with the topwater.
what aspects of central banking do you see are good and which aspects are bad?
So I want to give you an example that we adopted in Saga, right? When central banks got more than 100 years ago this fabulous new technology allowing them to take a piece of paper and print a number on it and say this is money, it didn't mean that anyone trusted this money. And so what central banks did was starting to peg this money to the previously trusted contract, gold in their case, and build intrinsically, slowly, trust in this new form of money that is a result of monetary theory. The understanding that building trust takes time and takes forward guidance and the ability to plan and to be transparent about your plans, I think is a good thing. I think it's decalibrated now with massive printing of money, whether you call it quantitative easing or the rest of it. But the essence of being able to plan monetary theory for a long time and to build trust over time, I think is a positive thing. You can see that the successful central banks were able to introduce their fiat currencies, then new currencies, with a relatively low volatility, which is something that I think we're striving to achieve in our industry as well.
One of the things, actually, you just brought up another kind of like tangent question, is that a lot of projects and crypto communities are experimenting with like multiple tokens and multiple coins or multiple currencies, right? I've only really seen this in Cuba, that has two versions of their peso. I think they have like the one that's used for domestically, and then they have like the tourist peso. It's like double. They have two different currencies at any given time. You think, can we explore this for a second? Like, how would that work, and what would be some benefits of a country, or is it just a bad idea of a country offering, like having two different currencies, maybe offering like what if the dollar offered a settlement dollar and then they have like a transactional dollar as opposed to, would there be a benefit to that?
So I think that we have other examples, quite successful. In Switzerland, you have the Swiss franc, but you also have a currency that is called VIR. And the VIR can be only settled in Switzerland, and it's a demurrage coin. So it's a coin where you get negative interest. Today, that's true for many other currencies. But usually you get yield on the Swiss franc and negative interest on the VIR. And so they built it in a way that...
Wait. So basically this is like staking. So this VIR goes negative as your balance of Swiss franc goes up?
No, as your balance of VIR goes up. The VIR is meant to ignite the economy in times of crisis. So, and you can only spend it in Switzerland. So if I was to tell you, Charlie, I want to pay you in VIR, in normal time, you would say, no, I want Swiss francs because I can pay with it anywhere and I'm not paying the penalty of negative interest. But comes a crisis and I tell you, Charlie, I cannot pay you with Swiss francs, but I can pay you in VIR and you're willing to take them. And I want to spend more VIR than Swiss francs because I don't want to gather negative interest. So it's a sort of two different monetary theories that are working in completing each other, if you want. And the VIR is already 90 years old.
I'm a little bit confused on what would be the motive on someone spending or saving or using the VIR over the Swiss franc.
Well, when the economy is slow, you are willing to accept the VIR because you want business. And I would want to spend my VIR instead of spending my Swiss francs because my Swiss francs would gather positive interest and my VIR would gather negative interest. And it's only limited to Switzerland. So it is really a sort of mechanism to reignite a Swiss economy in crisis.
And yet, so this would be like a nationalistic thing. So if people were living in Switzerland and they wanted to, more for like the sake of the country, that would be the benefit, almost like an ignition currency. I'm surprised people don't use like government bonds more as currency and settling in different type of assets. Do you think that we'll see now in crypto? Because you have so many in the regular world, the assets that provide yields are not generally liquid and tradable. And if they are, there's so many regulations. Like, for example, if I buy a house and it's bringing in 10% a year, and then someone says, hey, Charlie, and I have 10 of them, and someone says, hey, Charlie, I will trade you 5 of those houses for 5 warehouses that bring in 9% but appreciate a little bit longer. It's not freely trade, like the legal fees and the mechanisms and the way to actually do that trade doesn't really work. And so what I'm explaining to people is that the beauty of that is crypto, is that concept you can now do. You can now have tradable assets, tradable paper. And so stablecoins was such a big aspect of that. What was the stablecoin market like when you were introducing the concept of Saga and that, like, what was the world? I don't remember. Like, I think it was just Tether back then.
Yes. So when we started Saga early 2017, when we started drafting the policies, only Tether existed. I believe the market cap of Tether was about $600 million. And it was all alone there.
Yeah.
So it evolves. It evolved dramatically, and I believe that it evolves because people still need this unit of account function of money, the ability to count their value in something relatively stable that they already trust.
So, well, you brought up a unit of account and you brought up money. And I'll keep trying to bring the conversation somewhere, and then you take it back somewhere else. But it's all good. No, it's because I love talking about money, and I love. This is what I really like. I love that at the end of almost every episode that I release, I'll get at least one email from someone, and they'll say, "You know what, Charlie? I learned something new." And if I can get one email from every show of someone learning something new because I learned something new, then that's success in my book. The success of this show is education and entertainment and informing people. Because I think it's this understanding and financial literacy and love of all these different things, like the understanding of political science, sociology, monetary theory, philosophy, anthropology, social sciences. These are things that like you learn about in school, but they're boring. Now with crypto, it makes us understand these things a lot better. And for people that do, it gives you such an edge in your life. Not just in business, but the ability to just manage your family's finances. When you understand money and you're not afraid of it, you do better. It's not a complicated concept to understand.
Right. I think it's not complicated. So it's fairly complicated.
But it's scary.
But it's scary because it's so abstract. Right. Money eventually is a sort of a result of a social contract, of an agreement between people. The only value of money is the value we agree it has. And this is a sort of a very abstract terrain to walk in. It might be scary for some. I find it fascinating.
You know, Saga's based in Israel, and you guys are all based in Tel Aviv and Israel. And I want to talk about Israel's monetary history for a second, because it's very interesting. Israel's a very young country, 50, 60 years, I forget, 48.
72, actually.
72. I remember celebrating like Israel's 40-something year anniversary when I was in elementary school. How crazy is that? But I remember when I literally remember this vision. I was on the school bus one day, the yellow school bus, and my friend brought like a big box of Israeli money, and he was just giving it away to everyone. And I didn't understand. I remember like grabbing it all and bringing it home to my dad, and my father saying, "Yeah, this is not worth anything anymore." What happened then? Israel went through like a hyperinflationary stage and early in its what happened?
Right.
Have people studied that?
Yes, of course. So first of all, we are lucky to have Jacob Frenkel as our advisor. Professor Frenkel was the governor of the Bank of Israel in '92, and he is the one who is actually responsible for liberating the exchange rate in Israel. So back when I was a kid, when you wanted to, back when I was a kid, Israel had a more socialist economy, if not to say Bolshevik. And if you wanted to know the exchange rate of the shekel, you had to ask the Bank of Israel. The Bank of Israel would set, it was not a free float exchange rate, it was actually set by the central bank.
Why?
which is room for. So, first of all, this is a part of the basis of a planned economy, where the role of the state, and that was the case then, the role of the state in the Israeli economy was a very influential role, and the central bank, up until the 90s, the central bank controlled the exchange rate, like you see today in countries that are less of capitalist liberal democracies. And actually, Jacob Frankel changed that by introducing a price band. So he said, well, if you liberate the shekel price immediately, it will result in tremendous volatility, and we would lose quite a lot. So instead of that, a price band assured that is liberating constantly or gradually more the price, while the bank still is willing, the central bank is still willing to buy and to sell the shekel with a bigger spread.
Oh, so like similar to Saga in its so for example, if the shekel's trading, for those who don't know, I do video now. For those who are not listening, I have to mention it at once on every podcast. Untold Stories is now a video, so I'm holding up a piece of paper. And so for those who are not watching a video, you can't see this, but I'm going to draw out a chart. So essentially, if the shekel trades like this, what the Central Bank of Israel was willing to do was create like a floor and a ceiling, essentially?
Exactly.
Okay.
Exactly.
There's no question that crypto and gaming have gone hand in hand since the early days of Bitcoin when it first launched. And in fact, that's what really drove mass adoption. Companies like BitCasino, which is the first ever licensed Bitcoin casino, and brands like sportsbet.io. I mean, it's the reason people are using crypto and Bitcoin today. Fun, fast, and fair. When you're using blockchain-based gaming, make sure you require that they are fair, because there's no reason that they shouldn't be transparent, because everything can be seen on the blockchain. Coin gaming is so cool. It's an ecosystem of brands, products, and people that are serious not just about shaking up the gaming industry, but also the crypto industry. These guys have been around since the early days of Bitcoin. The CEO of Coin Gaming used to actually mine for Bitcoin and use the Bitcoin miner to heat his home in Estonia. I mean, those go down to like negative 25 degrees. So if you're cool about driving crypto awareness together, if you got a question or you just want to connect with their team of like dreamers and doers, the whole community, make sure you check them out. Coingaming.io, play some of their games, sportsbet.io, or BitCasino. Fun, fast, and fair. I'm Charlie Shrem. I'll talk to you guys right in a minute.
To say, well, if the volatility is becoming too high, we are always willing to buy and to sell from you in a known price. But your two lines were parallel and they should be expanding. So it started with a very small spread. So the room for price discovery was very small. And as the economy matured, the distance between the floor and the ceiling grew bigger, and allowing the market more room for price discovery until it was completely lifted. And today the shekel is just like any other modern currency, free floating.
Fiat, by federal decree, if you look at it, it's almost like the original Israeli currency. It's by federal decree. Yes, it freely floats, but we know it's manipulated. But that's another conversation. Let's assume today that I'm correct in that aspect of it. All stable coins are like the value are by federal decree. So same thing. What's the value of a stable coin, Ido? I got to walk into the stable coin store and they tell me what it's worth. Okay, follow me for a second. What Saga is now doing is taking that stablecoin concept and doing to it what the Bank of Israel did to the shekel.
Exactly.
Essentially creating that freely volatile stablecoin that now is freely tradable and volatile based on supply-demand economics. But because it's a stablecoin, there are reserves, and as the market cap grows, the reserve changes. There is a price floor and ceiling type of mechanism. How can you do that in a transparent way with blockchain that you couldn't do that before without blockchain? And how did the Bank of Israel do it? That's what I want to know.
So the Bank of Israel did not do it transparently. The only transparent element was the price band. The reserves were definitely not transparent. I want to think of Saga as a sort of a bridge between stablecoin the stablecoin element, and the free-floating currencies that we know, led obviously by Bitcoin. So what we did is to implement a bonding curve, which means that it is a continuous supply of token, fully elastic. When one buys Saga from the contract, it is created by the contract. When one sells it to the contract, they get back their ether and the Saga is being burned. So the number of Sagas in circulation is determined by the market, and we can consider that this number is the amount of trust Saga enjoys. When this trust is low, the price band is low, the reserve is 100%. Saga is fully backed. When this trust increases, the contract, well, I'm saying we, but it's not we, it's a smart contract, and it's a protocol that determines, based on the number of currencies outstanding constantly, how much the bonding curve ratio needs to be, and what is the price band. And as the economy grows, it allows more room for volatility and more room for price discovery. When the economy is very small, then the high reserve rate and the low price band is protecting from volatility. And we no longer need anyone to take decisions. There is a protocol that is doing it on its own.
And so I'm trying to choose my words carefully here. The additional added benefit now with this technology, blockchain technology, is now on top of that. Not only can you do everything you said, but you can also essentially have the early people involved in the project, or the governors of that central bank, potentially be voted out, not be involved anymore.
Yes, of course. We just went this week through the first vote of Saga. We proposed a change to the model, a change to the decay ratio of the bonding curve, and it was ratified by the holders of Saga. A month from now, the holders of Saga are able to vote for 10 more functions, like who would be the auditor of the company, like how much of the stablecoin portion of the reserve can be held in interest-bearing crypto instruments. But the peak for me is November, where all the holders of Saga get the right to dissolve the board of Saga, to send me and the entire board home, and to elect a new board. I think that this is a fundamental condition for such a project, that such a project needs to be owned by the currency holders and controlled fully by the currency holders and accountable to the currency holders. Imagine if you could send away as a citizen your central bank governor because of monetary policy, and elect a new governor. This is really one of the fundamentals of our project.
That's very interesting how that would work out. Do you see like campaigning, or do you how would that? I'm just kind of curious the scenarios of how that could play out.
So, I don't know more than I know.
Do you want to stay?
Of course I do, but I want to stay as long as the holders of the projects want me to stay. I need to get up in the morning and remind myself that although I am investing my days and night in this for 3 years now, this is not my project. So yes, I want to stay as long as you want me to.
I want you to stay, but I also want to present you with a scenario that you could help me dissect and understand. When you talk to people, I try to talk to people a lot who disagree on everything I say, who do it in somewhat of a respectful way so I can understand why. One of the arguments I hear still against crypto from people is when they tell me that, Charlie, we understand everything that you're saying. We get it. We get it even better than you. But what you don't understand is the reason a central bank exists is to provide decisions against herd mentality. And that is to say that when you're in a time of crisis like a coronavirus or a war, if you have everyone being a stakeholder of the central bank, they may make a rash decision for the short term as opposed to the long term. And I understand that, and this is what struggles me, is like I do agree with that. And I do agree with that, saying like, here we are in COVID-19. I'm not a monetary economist, And I do know that some of these guys who do work for the central banks here, or the Federal Reserve or the Bank of Israel, are a lot smarter and a lot better and more well-equipped to make financial decisions for my better well-being than I am. But at the same time, we know most people are not, and they're corrupt and there's embezzlement. So it's like a balance on both sides, right? How do you feel about that?
So I agree with them and I agree with you. And I think that
I've had that problem all the time.
The truth is in the balance. Decentralization, full decentralization, direct democracy comes with a price. It comes with the price of populism. It comes with the price of herd dynamics. Sometimes this price is worth paying. If I would tell you that everyone taking decisions in your name that is an expert is corrupt, you would tell me, well, I prefer being populist and unsavvy and take my decisions for myself. But sometimes this price is not worthwhile paying. And this is why in Saga we have 4 different branches of decisions. The supply of money, printing money, is only to the protocol. It's fully decentralized.
Interesting.
Because this is exactly where there is too big of a temptation to, it is very tempting to print money out of thin air.
I was talking to Dan Larimer last week on the show, and we brought up this project, and we actually discussed this very topic about the balance of central banking and you know where he stands, whether he's radical. And his idea, and he's actually trying to build out, and he's launching this whole new consensus algorithm, because that's what Dan Larimer does, is he launches a lot of coins and tokens, is that he has this whole new concept. And let me try to see if I can explain it accurately. Instead of doing like a direct democracy type of thing in crypto, and instead of doing like a block producer type of direct democracy where you're like with delegated proof of stake that you're voting for that person, he proposes a different type of situation where it's like, I forget what he calls it, but you vote for pods. So it's like, let's just say there are 100 stakeholders. All 100 of them get randomly put together in these groups of 10, for example. And those groups of 10 vote for the person who can then vote on their behalf. And then it creates like almost like a voting pyramid type of thing. And what that does is it creates a layer of preventing what we just talked about, of these rash decisions to be made, because you create a level of like, okay, I'm not voting for like me. I'm not voting for like 1 million people, but I'm voting for these 10 people who are part of my family and friends. So it's like you have a moral obligation to these 10 people type of thing.
Sure. So we resolved it differently. Let me give you an example. When it comes to monetary policy, we have a monetary committee that takes those decisions, but those decisions are all subject to a veto right by the holders of Saga. So there is room for expertise in some areas, but this room for expertise is always elected by the holders of the currency and is always accountable to them, subject to the ratification of decisions, as we've just done with the latest change to the monetary policy.
Wait, can you expand a little bit more on that, though?
On the change itself?
Yeah. Sure.
So there are 3 main elements to the change. The first element to the change is that we, as we've mentioned previously, Saga is built on a bonding curve mechanism, being that when the currency is very small, there is 100% of reserve, and the price of Saga, we hold our reserve in the SDR. It's a basket of the 5 most traded currencies. It's a basket set by the IMF that central banks are actually holding for their reserve. And funnily enough, in the past 4 years, with the decline of the dollar, the SDR went up because it mitigates from holding a single currency. So the model says that when we're very small, we are at 100% reserve. When we grow, the intrinsic appreciation of Saga starts developing. And we've changed this curve to allow slightly more volatility at the beginning of the currency. And we did it because we understand up until now we were a pure academic monetary experiment, and now we're evolving, and we need to introduce a system of incentives for early adopters to be the first ones to join the Saga ecosystem, and this is what we did by the means of altering the monetary model. We also accelerated our governance decentralization, so everything I just told you, ratifying the change of the model, 10 more functions for people to vote on, being able in November to dismiss the board and elect a new one. This is the recent change as well. And we've also changed the name from Saga to Sögur. The ticker changed accordingly from SGA to SGR. Saga in North is the name of the northern mythology, and Sögur is the plural of Saga. So it's a part of our evolution as well.
This experiment that is Sögur, how do you see it playing out in 5 years? Like, what are some scenarios that we could see happening with like a robust community of people that want to be a part of this new money?
So I think that the plausible scenario that I can envisage is first for Sögur to serve as a store of value. Because of its reliance on the SDR, because of what is surrounding us. We're speaking of the crypto industry, but the entire world around us is shaking with trade wars, with massive printing of money. And I think that people are more and more realizing that putting their entire livelihood into one currency, and most people that are not sophisticated traders are not holding a lot of different assets. They are holding mostly cash, and they are the most exposed to those fluctuations. And so I think that Saga is first going to be adopted by those who want not to be exposed only to their national currency, but to a basket of currency that offsets the risks of such volatility of currencies. But then the next step is using Saga as a medium of exchange for transnational, for global commerce. So just to give you an example, right? If you're a British citizen, and after Brexit, the pound went down by 25%, when you purchase in Britain, you are actually fine because the British economy reacts to the same Brexit. But when you go and buy on Amazon, you lost 25% of your purchasing power because the prices on Amazon are not reacting to the British economy. If you held Saga, you wouldn't have lost this. And this is how I see it playing out. Eventually, as a complementary global currency to the currencies that are out there.
Could you think crypto could ever be added in the basket of SDR? Like, what about gold and things like that? Or do they keep it to national currencies only?
No, the SDR is dollar dominated. It's dollar, euro, renminbi or yuan, yen, and pound. And the renminbi was added only very recently, a few years ago. So it's a basket that changes very, very slowly. In the future, I think it depends on the predominance of cryptocurrencies in the overall global economy. Eventually, when we become a bigger part of the game, I don't think it is. It can be avoided to add us to such basket. I believe it will take a long time.
What will be the relationships between all these different cryptocurrencies? I wonder down the road. I think about that because there are atomic swaps, and you have wrapped Bitcoin, so you can wrap a Bitcoin on the Ethereum blockchain or whatever. So you have peg coins and stable coins and such. Mm-hmm. I always wonder what the relationship will be. And I wonder what will the coin market cap or the crypto landscape look like 5 years from now, or even 10 years from now. I can't believe we are where we are today in 10 years. And not unfortunately, but I think that adoption has gone so fast. It worries me a little bit how fast crypto is growing. Simply because I don't think Satoshi foresaw the world shit happening kind of this quickly after he released Bitcoin. It's not really a question, it's more of a statement, but I want to hear your thoughts.
I think that I would be very happy for us to evolve slower because it would mean that the world is doing better than it does now. Unfortunately, I believe that we will have to evolve very quickly because the world is facing a crisis. And I think that this is not just a monetary or a financial crisis. It's a sort of a governance crisis and a social crisis that has monetary and financial aspects. And I believe that cryptocurrencies could be a part of a solution, not so much because of the technology, but because they're enabling different types of organization. They're enabling people from different countries, from different states, to organize together with a financial logic, with a system of incentives together. And I think that this is something that is sorely missing in the quote unquote traditional world. And so I believe that we will see a very significant evolution of cryptocurrencies in the few years. I really hope that this is a true fundamental evolution. For me, the market cap is important, but it's not most important. The question is, who is adopting cryptocurrencies and for which reasons?
That's a good question.
When you go to Argentina and Venezuela, and today you see it in Turkey as well, and in Brazil more and more, you see people that are not having those philosophical discussions about cryptocurrencies. For them, cryptocurrency is of immediate usage, right? If you live in Argentina, you lost 70% of the value of the peso in the past 3 years. And if you're able to hold Bitcoin, you have a better store of value, and you pay with it for your groceries. This is an adoption that I like because it really solves the problem, a daily problem for people. It's not about speculation. It's not about the philosophy behind thing. It's about a very practical problem that they are facing and that we are able to solve for them.
I was very short-sighted when it came to stablecoins, because in the beginning I was saying that but stablecoins are basically just crypto fiat coins, but I was wrong, because the value of them comes from the folks that you just described, the ones that need a currency, digital currency now, because their government currencies are just not working. They're failing. A lot of these people love Bitcoin, but they don't want to use Bitcoin for reasons that they don't want to sell it, or it's too volatile or whatever. So I was wrong about that. I was a little bit short-sighted on that. But yeah, it's interesting how adoption, I thought, what I thought, the way I thought this would be was you would have like Bitcoin and you'd have a killer app or something, just the world would just adopt Bitcoin, and it would just be this thing that would be in existence, like bagels or everything else. What I didn't foresee is this world of altcoins come to the fold. And what these altcoins did is not create an alternative to Bitcoin, but these altcoins created alternative to everything else. And so what these altcoins became is basically like owning a piece of that infrastructure that's changing things like central banking and title insurance and manufacturing and all these different things. And Bitcoin chooses to do one thing really, really well, and that's what it does. And so, yeah, this is me admitting that I was short-sighted on that. It happens.
I think it's amazing to have the ability to have this variety. Eventually, we're all experimenting. We're still in the experiment phase, right? We're a young industry that exists for a very short time, that is still finding its way, and we're experimenting. And I don't see a reason to limit ourselves to one experiment. It is definitely not an efficient thing to do if we want to strive for mature solutions. And some of the solutions we come up with will die. Some of them will be successful. And different solutions will be successful in different use cases and for different people. So I really see a sort of cohabitation between a lot of cryptocurrencies that are solving many different problems.
Yeah, I agree. There's this famous scene in a movie that I saw back when I was in school, and it was like they were trying a vaccine for something, and they were just testing everything, even though they knew half of this stuff wasn't going to work. Like they were testing, will chocolate kill the virus? Of course, chocolate won't kill the virus. But you have to have like a scale, a spectrum. You have to try things that you know for sure won't work, because it'll be a control. And that's kind of how I look at the crypto industry now is, yeah, there are a lot of things, like, especially now with DeFi, we know like Sushi Swap and whatever is not going to work long term, but it's more of like that experiment now and seeing how they play out. Yeah, a lot of people are stupid and are losing money on all of this crap. And I personally don't buy a lot of these tokens that are offering just these crazy yields, because I don't want to lose my shirt. But at the end of the day, a lot of people are, and they have every right to.
Definitely. And here I think that comes another element, which is responsibility. we experiment. We need to experiment responsibly, which means that the token holders should have the ability to exert control over their assets. Transparency is key. One of the elements that we invested a lot of time and resources in is creating the Saga model as a predictable model. So at any time, if you tell me how many sagas there are in the world, we can the model, the protocol can tell you what would be the bonding curve rate, what would be the monetary model pricing willing to buy and sell back the token. We believe that predictability and transparency are two key features to be able to experiment on one hand, but do it in a responsible way to the holders of Saga and other projects.
How are you feeling about with Saga now and with this vote and everything moving forward?
So we're very, very happy to have the proposal that we've made approved. I think that now starts the most interesting phase of the project. It really meets its market, and it really meets the holders that are going to be the sovereigns of the projects and taking decisions for the project. And you know, up until now, we've been working in our sort of cocoon, which is nice and pleasant. But now I'm very happy. We have answers to give the market, and we have to persuade the market that we're worthy to continue and lead the project, which enters a new dynamic that I think is very healthy for the project. I'm very excited.
And I know a lot of people are. What are some good resources people can go to now to see what's going on with the project? What's changed and how are things moving forward? Where can listeners go to check it out?
So we have a project Telegram group that you're all very much invited to join, as well as the social channels. On our website, there is a resources section that is rather heavy lifting, a monetary model of about 80 pages, but one that describes really the bits and bytes of the bonding curve model, of the price band, everything that we've discussed. I believe these are the main sources to discover more.
Awesome. Ido, thank you so much for taking the time and coming on the show today.
Thank you so much for having me, Charlie. It was a pleasure.
I know a lot of listeners are going to be excited and check it all out. And we're excited to have a follow-up in a few months and see how things are going. But I'm more excited for the whole industry itself.